Hello investors and future investors, welcome to the channel. For today's video, I will be showing you two of the most exciting stocks that can be traded right now. Even more, I will show you how these stocks are trading at very low valuations, that even if you are trading with a small account, you will be able to use these stocks in order to make consistent income. Now, if you are new to options trading, or you're trying to use options in order to help supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I have two stocks that's gonna absolutely blow your mind when I show you the option strategies. The first on the list is gonna be none other than Hims and Hers Health. Now, the reason why I'm going to be highlighting this stock and the other one is because of the explosive growth and the amount of premium you can make by trading these stocks. So bear with me as we get into this. And the second stock on the list, for those of you that have been subscribed to the channel for the longest while now, you guys would not be surprised. I have been trading the stock for about 5 years now, and I have several videos on this stock, so stay tuned for that. At the end of the video, I'm going to show you how to use these shares or how to acquire them in order to go ahead and perform the option strategies I will be highlighting. Now, you guys know how we do it. We like to go ahead and get down and dirty with options, because the only three proven ways in order for you to learn options and be good at options, and that is going to be to practice, practice, practice. Now, let's go ahead. We're going to go ahead and jump into the advanced feature right here in order to go ahead and open up the chart. We're going to be going to the 1 year outlook to see how the chart setup is. Now, once again, for those of you that have been rocking with the channel from the inception, you guys going to know this is my optimal setup right here. This is just absolutely beautiful. The reason why this is beautiful, for those of you new to the channel and you have not subscribed yet, the reason why this is beautiful is because the current share price is trading below the 200-day moving average. The 200-day moving average is this blue line right here that runs straight across. Whenever I see that setup, it tells me that there's a lot more upside to be had than there is downside. And why I think so is because the 200-day moving average, it actually tells us where the share price has been trading for the last 200 days, or roughly around 6 months. So it's a pretty good indication of where the share price should be trading. So the fact that the current share price of Hims right now is 36.60, and that's below the 200-day moving average of around 40, I think it's $47. That tells me there's a lot more upside than there would be downside. Now, the current share price is at $36, and Hims has reached a very high price for the last week of, the last month actually. The high it got to was around 67. So pretty much Hims is trading right now at half the price it was trading at just about a month ago. So that's absolutely incredible. But you have not seen the best part yet. Wait till I get into the options. Now, the other reason that makes this one of my best setups is going to be the RSI. Now, as you can see here, the RSI here stands for Relative Strength Index. And the RSI is simply a momentum indicator. It just tells us where the stock is trending, whether the stock has been overbought or oversold. Now, if I follow the RSI line right here and I go to the peak, you're going to see the RSI on Hims right now is around 44. Just as an analysis, the medium RSI is usually going to be around 50, and anything going from 50 go up towards 70 tells us that the stock is going into overbought territory, and vice versa to that. From the 50 mark, any RSI that goes down from the 50 mark going towards the 30 mark tells you that that share price is entering into oversold territory. Currently, Hims is entering into oversold territory. So that's why this setup just always helps me out, and it's given me so much success over the years. Now, let's get into what you guys have been waiting for, and that is the options. Now, let's go back to Hims. And then what we're going to do, we're going to go ahead and open up the options chain by scrolling down right here. We're going to go to trade Hims option right here. Now, before you get excited, Hims is trading at a really nice price right now. I did not say it's trading at a very good valuation. I said it's trading at a very good price. There's a difference between the price and the valuation. The valuation is not of key importance to me because I'm not very interested in the stock over the long term. My main interest just lies in the option premium I can generate from trading this stock. So, and one more thing before we get into it, Hims Although it's trading at a very low price, the low for the year was around $20. So although I see there's a lot more upside than there is downside, there's still a possibility that this stock continues to decline. So just keep that in mind before implementing any option strategy. Now, the option strategy I want to go to, let's go ahead. This is the option chain right here. And before I get into detail with this option strategy, I need you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. The second favor you want to do yourself, always make sure to have an exit strategy before getting into any options trade. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, these videos are for entertainment and educational purposes only, and they merely represent what I'm doing with my personal portfolio. So here goes. With HIMS in your portfolio, we want to go to sell, we want to go to call, and now we're going to be looking for an expiration date of around a month. So we're going to be going with December 19th, which gives us 30 days to expiration. What we are looking for, we're looking to do monthly expirations on HIMS. So now that we have sell and we have our call and we have our monthly expiration date, we're going to go ahead and choose our strike price. The strike price I'll be going is going to be above the current share price of $36.61. And that price I'm going to be choosing is going to be the $46 strike price right here. Now, there's lots of reason why I'm going to go with the 46 strike price. The number one reason is because I want to give myself a lot of distance between the current share price and the strike price I choose. And that's because HIMS is a very volatile stock. Let me just go ahead and show you what I'm talking about. So we're going to go ahead and click into the strike price right here to open up what's known as the secondary options chain. Now, the secondary option chain is also known as the Greeks. So what we're going to be focusing on is this right here, which is known as the IV, or the implied volatility. Now, the implied volatility just tells us about the volatility of the stock, whether the stock moves up or down very quickly or very slowly. So just for analysis, any stock that has an IV of between 0 to 50% tells you that the stock is not going to be fluctuating very fast in either direction, up or down. Stocks with low IV are not very particularly good for options trading because you're not going to get the good premiums that you want. Stocks with low IV are usually like dividend stocks or so. Now, any stock from a 50% to 100% IV tells you that the stock may have some spurts in the upwards or the downwards direction, but not anything drastic. Any IV between 50 and 100% as an option trader, that's where the sweet spot is, in my personal opinion. Now, the other end of that extreme is going to be stocks with IV of over 100. Anything over 100 tells you that the stock is extremely volatile, and it could have upwards or downwards swing within the blink of an eye before you go ahead and serve your next cup of tea. So you really need to be careful with any stock that has an IV over 100%. I am not saying that they cannot be traded. All I am saying, you just need to be more careful when you trade them, because the higher the IV, the more premium you can get. Now, before I go ahead and continue the option strategy, I want to bring your attention to one more thing, which is going to be open interest. At the particular strike price I chose, which is the 46 strike price, right here, you can see there's almost 8,000 contracts of this. So 8,000 people or 8,000 contracts have been opened up with that particular strike price. So I'm not the only one that think this is an excellent strike price. So let's go ahead. Good. So now with the $46 strike price right here, I have a very high chance of profit. The chance of profit I have is 88%. 88% is an extremely high chance of profit. It also tells me that if this trade were to go against me, there's only going to be a 12% chance that I'm going to lose this trade. So with the $46 strike price and a very high chance of profit, I'm going to get paid because I like to implement income generating option strategies. So the amount I'm going to get paid is going to be right here, 0.80 or 80 cents. Now, 80 cents in the real world is going to work out to be $80 because one option contract always contains 100 shares. So you're going to multiply your 80 cents by 100 shares, that's going to give you $80. This particular option strategy that I will be using on HIMS, yes, I will be doing this in my personal portfolio, is going to be known as a covered call option strategy. The covered call option strategy, like I just mentioned, is an income generating option strategy, and I think it's going to be perfect for an explosive stock like HIMS because, like I just showed you, HIMS has been trading at a very low price right now, and I think everyone should take advantage of this. The other reason why I went ahead and chose a $46 strike price, again, is because I want to make sure I give myself some serious distance between the share price and the strike price. Now, this here is going to be regular options premium you're going to be making while you're waiting for the most important aspect of this trade. The most important aspect is going to be what's known as the share price appreciation, or what I like to call the investment gains. So, when HIM's share price decides to go back up, and I'm pretty sure it's going to go back up, it needs to go all the way to the $46 price in order for you to lose this trade. Now, if you do own 100 shares and you bought those shares at $36 and you lose those shares at $46, you will be making an easy $1,000. You're going to subtract your $36 per share right here from your $46 strike price. If you do go ahead and lose the shares, that's going to give you $10. Once again, these are option contracts. So you multiply your $10 by 100 shares, that's going to give you $1,000. So if the trade do go against you, you still stand to gain about $1,000. And if that does not materialize in the near future, then you could continue, just keep selling monthly expiration dates and keep locking in this option premium right here. That is what's going to be used to help you grow your small account portfolio. Now, I did mention the current share price of HIMS is just $36 per share. So if you are trading with a small account, you should be able to go ahead and do this option strategy. Now, if you guys have any questions about HIMS and what option strategies I will be using, just go ahead and let me know in the comments below. There is another option strategy that I am going to be using with this stock, but that's going to be only for the YouTube channel members. I will go ahead and disclose that video to them. If you guys do want to know about that, just go ahead and become a member on the channel. Now, the moment you have been waiting for is going to be the second most explosive stock, which I think is a massive opportunity right now. And that stock is going to be none other than SMCI. Now, most of you have been watching the channel know I have been trading this stock for a very long time. I really like trading this stock because it used to give some really good premiums. The premiums have subsided just a tad, but it's still worth trading. I did lose all of my shares at a $45 price, and that's perfectly fine because I did make a lot of investment gains and I did make lots of premium. Now, with SMCI, let's go ahead and jump into the advanced feature again to see how that looks. Let's go to the 1 year outlook to see the chart setup. And once again, a thing of beauty, investors and future investors. Share price trading below the 200-day moving average, an RSI of around 43. This setup just works all the time for me. Remember, this setup works for me almost 100% of the time, but this is my particular setup. Always make sure to choose a setup that works for you. Always choose option strategies that works for you and your portfolio goals. So let's go ahead now back to SMCI. Okay, so here we are back on SMCI, and the price per share is around $35.87, which is roughly similar to the price of HIMS. Now, you can go ahead and use 2 of HIMS or 2 or Supermicro, but remember, you always have to worry about something called portfolio diversification. One of these are in the AI semiconductor, the other one is the healthcare sector. So at least you diversified 50%, 50% if you only have these 2 only in your portfolio. Now, although the current share price is really good in my personal opinion because it has a serious drop, I'll show you the drop in just a second. The 52-week low for Supermicro is around $24. So once again, this stock can continue to go down, just letting you know. The reason why I decided to trade it is because I have been trading this stock for a very long time. I know how the stock works. I think the price right now is an incredible price. So if I go over right now to the year to date, you're going to see the price it was trading at right here was $60. So once again, just like HIMS, the current share price represents an almost half the price. So let's go ahead and get into the options for SMCI. Let's go trade SMCI options down to the bottom here. We're going to be going to sell and call once again, and then we're going to be doing monthlies once again. So December 19th. So once again, we're going to be choosing our strike price above the current share price. And then now I'm going to be looking for the exact same amount of premium, which is going to be around $80. And that's going to give me the $41 strike price. I did give myself a good distance between the two again because Supermicro is not going to move as fast as HIMS, so I'm pretty fair with going like 6 strikes above the current share price. So current share price $35, strike price of 41. The difference between the two is going to be $6. If you are assigned your shares or if you lose this option, then you're going to be making an additional $600. Now, with the $41 strike price, the chance of profit is still pretty decent. It's still pretty high. The chance of profit is 85%. So The odds of this trade going against me is roughly just 15%, so I could definitely live with that, and that definitely is in line with my portfolio goals. So as I just mentioned, I will be getting 0.85 cents, and that's going to work out to be $85. This option strategy as well is known as the covered call option strategy, and the covered call option strategy is a perfect option strategy if you're getting started with options trading. This strategy allows you to make consistent income on a regular basis while using that income that you generate to grow your account's portfolio. Now let's go ahead and check out the IV, or the implied volatility, for this particular strike price of $41. Right here you can see the IV is around 78, so it's quite similar to HIMS, and it does have a lot of open interest as well, around 1200 open interest. So it's definitely a good strike price, the $41 strike price. Now I showed you guys the two stocks that's going to have explosive growth in order for you to make investment gains and also for you to make consistent income. Now, I also show you the strategies that I will be using in my personal portfolio in order to trade these two stocks that have explosive growth and really nice premium. Now, what I'm going to let you know is how to acquire these stocks in order to do these option strategy. The best thing to do these option strategies on both these stocks, SMCI and Hims and Her Health, is going to be to buy the shares outright. Remember, I just showed you that there's still a possibility that the share prices of both these stocks can continue going down. So now would not be the time for you to be going ahead and do long-term option strategies. When that time does, however, come around, I will be making updated videos just to let you guys know. So the best strategy to do is to do a DCA, or dollar cost average, or if your small account portfolio could actually buy 100 shares, then you could go ahead, buy 100 shares, and then start selling covered calls. Be very careful, investors and future investors, about your strike prices. Make sure you give yourself some wiggle room between the current share prices and also the strike price you choose in order to sell your covered calls. And lastly, always make sure you have a date that works for you so you can continue making consistent income. So there you have it, investors and future investors. These are the two stocks I think right now have the most explosive growth to come. The implied volatility is really, really high, but not anything ridiculous. And both these stocks are in contrasting sectors. One is in the healthcare sector, the other one is AI and semiconductors. So for those who had got to the end of the video, you guys are the real investors and future investors. If you guys have not already, go ahead, subscribe to the channel. Make sure to like the video. For you guys to get every single option strategy that I do on this channel and some extra option strategies that you can go ahead and practice with your own portfolio, then go ahead and become a channel member. It's actually just $6.99 right now. The price will be going up come January. Now, the overall point for me making all this video and putting out all this free content is that I'm trying to help a lot of people start making income from options trading. So if you guys know of anyone struggling to grow a small account portfolio by using options and you think this video could benefit them, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.